Welcome back. I'm Pratap here. Today is 19th March 2024. In this video, let us continue our analysis on NIFTY 50 based on the analysis we did on last Sunday and yesterday. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos I kept in a playlist supply demand zone price action course at our NeoStock YouTube channel. Even I have provided the link to this playlist in this YouTube video description. You click the link, you will get into this page and then scroll down the page to the bottom, and here starting from lesson 1.1 all the training videos are available in an order. Please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be helpful to you. Each time when we release a new video, we will provide an update in the channel. Now let's get into analysis discussion. We have already seen in the previous two videos, bears are keep on building their short orders, and moreover their short orders are active. So that is the reason why slowly they are consuming all the demand. That means the supply is consuming the existing demand. Even today we experienced the same, we witnessed the same. Today we got only one long opportunity that I will show you. How the day is started? The day is started with the violation of the first 5 minutes high liquidity demand zone with a gap down. Yesterday this zone is given some good support, and today it is violated with the gap down today. So this is the first high liquidity zone is gone. After that the prices entered into the next 5 minute high liquidity demand zone, but we are not positive about this zone. The reason is already prices went more deep inside. That's why we already discussed there are low chances to get a trade in this particular, get a success. And today prices came, but sometime few points it gave a support, but ultimately the supply is very strong. Even this 5 minutes high liquidity zone is violated. And just below the origin, this is the 15 minutes high liquidity demand zone, which was the origin behind the earlier high liquidity zones, because it tested several times here, and later on the newly created 5 minute zone took the support. But today what happened, even this 15 minutes or 25 minutes high liquidity zone is also not able to withstand. The reason, there is a reason, because the reason is it doesn't have any more fresh zones here within this. And whatever the zones are there, they are not good enough to consider them, because 5 minutes zones are not very clear. If you fine tune, because we are inside the 15 minute zone, we didn't have a proper, and there could be one, we can fine tune drop, base, rally, but this is already tested here as well as here. This is not a high liquidity 5 minute zone. This is a normal zone. We can expect a trade inside the high liquidity if it is a fresh zone, because it is already tested, easily it will violate. After that there are no more high liquidity zones, fresh high liquidity zones are available. Fine tuning the zone concepts you are already aware. I already explained in lesson 16. And also everyday high liquidity zone analysis videos we are discussing this point. This is how we trade with high liquidity zones. Because there is no more fresh zone, definitely we know this zone will be violated. That is what happened. The reason earlier this zone is not violated, because the 5 minutes high liquidity zone just above, it gave a very good support all these days. So finally its expiry time has come today, and this is also violated here. So let us delete this zone. And moreover, the point you should understand, the daily demand zone is violated. So here are some interesting points. Major changes in the analysis will take place now. Why major changes in the analysis will take place? This is the first demand zone is violated after our trend has become uptrend. Because this daily demand zone is violated, daily trend is changed to sideways. Okay, what will happen if daily trend is changed to sideways? Because the daily trend is changed to sideways due to demand zone violation, now from the supply side, counter trend trade setups will be enabled. So shorts will be enabled for first counter trend trade setup. How long it will continue? Until one more demand zone is violated. Because at the time daily trend will be changed to downtrend. Then you will be doing your trade as per the bearish trade setup. But now what happened? Shorts are enabled, but they are based on the counter trend trade setup. That means we are planning against the trend. You can plan the trades. So now daily demand zone is violated. So let us delete this daily demand zone. This is no more valid because price is closed below this daily demand zone. Then where we got the trade opportunity? Because I told you that today we got only one trade opportunity. I'll show you. First delete daily. But from where this daily trend was created earlier, from this 125 minutes, 75 minutes high liquidity demand zone, daily zone was created. That was the reason behind the daily. Now the daily is gone. More our daily trend is changed. But this is 125 and 75 minutes is a high liquidity zone. I already explained how to trade with high liquidity zones. We've been trading every day high liquidity zones. Every day I am releasing one analysis video on high liquidity zones. Whatever the concept, same concept you have to follow here. What is that concept? Inside 75 minutes high liquidity, you should look for a 15-minute zone. So let me go to one time frame below. One time frame below 75 minutes. See here we have a 15-minute zone. We have a drop, base, rally. Of course, this base candle is not a very convenient one. It is range is very high, but still fine-tuning point of view you can consider. This is drop, base, rally, but what we want below the time frame, that is below 15 minutes time frame, we have a 5 minutes, we should find a proper order flow. So that's why let us go to the 5 minutes time frame. Inside that 15, is there any 5-minute zone? See here. We have a drop candle, we have a base candle, and we have a rally candle, and then a follow-through candle. Excellent. This zone is excellent. So definitely you can plan a trade. But the problem is risk is high. How to minimize the risk? You have one more option. Go one more time frame below. So the next time frame to the 5 minutes is 1 minute time frame. You can also go to 3, but generally we prefer 1 minute. Compare it to 3 minutes. Because 1 minute is having more clear order flows. The real order flow you may find. So that's why what I did inside this, I have seen a candle. We have a rally candle, base candle, and a rally candle. See, this is only the risk, small risk. If prices enter into this area, you can take a trade. Is the prices entered into that area? Yes. See here. Prices entered into this area. Then what is the target? The target is 15 minutes target. This is the beauty of high liquidity zones. High liquidity zones will give you an entry at fine-tuned 5 minutes. Even you can go 1 minute fine-tuned zone also if the 5 minutes risk is high. That is what we did. We took a trade here. Then where is the target? 15 minutes target. So let me show you 15 minutes time frame. So this is the 15 minutes target. So this is the way it has given around 50 points move. You also get RR because now you are taking trade at 1 minute. So this 1 minute to 15 minute zone, you will get the RR. You may ask how much RR is there. Let us check here, see the long trade, long position. This is our risk. A little below the distal because we should add some stop loss buffer. I added a little below. And this is our target. And this is 1:4.29. Excellent. 1:4. 1:4.2. You got a good RR. And you have around 46.3 points. So close to 50 points. Move only it has given. But anything, a trade is a trade. How we planned a successful trade. But not only this. In this 15 minutes time frame, even you can plan a short trade also because shorts are enabled now. Now the trend is downtrend. Which trend? 15 minutes trend is downtrend. You will take inside this 15, fine-tuned 5 minutes is there, you can take a trade. See here you have a fine-tuned 5 minutes inside this area. Here you can take a trade, maybe slightly pierced, but it is within your stop loss buffer. You would have got another 50 points trade from the supply zone to here. That means total you would have got 100 points trade today. One is a long trade and another one is a short trade. This is the beauty of high liquidity zones and our supply demand zone price action theory. This is first trade is based on high liquidity zone trade. Second trade is purely based on our supply demand zone as per the bearish trade setup. Because we have to plan against we should trade only in favor of the trend. You cannot trade against the trend. The only place you can trade against the trend is high liquidity zones. High liquidity zones, we don't bother about the trend. But if the fine-tuned zone is having proper order flow, see, this zone is having proper order flow. It's a fresh zone when we take the trade. So it's a successful trade. Now we are planning another trade in favor of the trend. Now a short trade here. This is the way you would have got 2 successful trades. Even though the zone, the 5 minute zone is slightly pierced, but this is within your stop loss buffer. Because in every day in our stocks near demand and supply zones and bullish bearish trade setup videos, end of the video I am providing stop buffers for every stock. NIFTY stop buffer also available there. If you add it, it will come a little somewhere here. You will use 3% of the NIFTY ATR value. Stop buffers I already explained in our recent training lesson. That is lesson 19.1. I explained about stop buffer. Lesson 19.2, the last training video lesson, I explained about position size. If you don't listen, please listen them. And what is this concept? Inside 75 minutes, we have to fine tune to 15 minutes. Inside 15 minutes, we have to fine tune to 5 minutes. If 5 minutes risk is high, still you can fine tune to 1 minute. What is this concept? Fine tuning the zone based on the zone confluence. I explained in our training lesson 16 all these concepts. If you did not listen, please listen those concepts. I explained all the concepts about fine tuning the zone. I explained when a zone will be violated, how to identify when a zone will be violated. That is an important concept because you should know how to identify when a zone will be violated. Many people doesn't know this concept. I explained everything in detail. Please go through them. Okay, now let's get into our main discussion. Even before that, this zone, this entire 75-minute zone is also pierced. See, just pierced here. So no more this high liquidity is valid now because we never trade on the pierced zones. So let me delete this zone. this one, whatever we fine tune now. Now ranges are changed now. This we can delete this. The new ranges, this is the one what we already predicted yesterday. This is going to be the new range now, probably for your tomorrows. But before that, you need to see what's really happened today. Today, a daily supply zone is created. That too, that is a high liquidity supply zone as per counter trend trade setup. We have to draw that zone. So let us go to the daily time frame. Time being, let me delete this blue color range. Later on we will discuss. Where is the supply zone here? Daily supply zone. Generally, how do you identify? Some people say maybe this is a drop candle, this is base candles, and is it a leg out candle or medium size candle? These kind of doubts you will get. If you would have attended our training programs, clearly you will identify this is a leg out candle, because in phase 1 training program, in practical session I explained hidden body and hidden zones. This is a hidden zone. See, from the previous close, see the hidden body we can add. This entire thing is a huge drop candle from here to here. This is a base candle. This one is not a base candle. The reason is, see, again a hidden body you will be adding. If you add a hidden body, this will become a medium size leg candle, and moreover, because the body is more than 50%, this is a leg candle. We can consider this as a drop, base, drop. We have only one base candle. See here, software also exactly work like that. So today this high liquidity zone is created, a fresh zone, and it got the achievement, zone achievement. Because today's demand zone is violated, it got the achievement. While creating itself, it got the achievement. And when it is created, leg in is on 15th. It is having only one base candle and a leg out candle. And what kind of pattern it is? A drop, base, drop. So that means we have to draw a zone like this. Sorry. You have to draw a zone like this. This is the drop, base, drop. What kind of zone it is? Daily zone, daily supply zone. And this daily supply zone is having confluence with this 125 minute supply zone. Inside we have a 5 minutes high liquidity supply zone. And what I do, time being, let me delete this 125 minute supply zone. That is not important. That is a normal zone only. This 5 minutes high liquidity demand zone is will act as a bull trap. Sometimes institutions, see, they set up the trap. Just below that they identified the high liquidity zone. In case if this high liquidity zone is violated, orders will pick up from this bull trap, and again they push the market down. Just before they set this trap. And moreover, this trap is a 5 minutes high liquidity zone. And one more thing, this zone is having EMA confluence now. In case if it, maybe tomorrow if prices went and if there are some high liquidity zones are there inside and picked up the orders, you get a very good profit from that zone. Counter trend trade setups work like that. And the candle is from here. This is it. Okay, anyway, this is the zone new. This is a high liquidity daily demand zone. Sorry, supply zone. I am using a wrong word. Daily high liquidity supply zone. Sometimes I am making mistake. Instead of demand zone, I am saying supply zone, or instead of supply zone, I am saying demand zone. Sometimes. So please correct whenever I make a mistake. Okay, next, what is the next step? Next step is, are there any 75-minute zones created, high liquidity zones today? Because all our analysis is changing now. That's why we have to do again from daily onwards, fresh analysis we have to do. So let us do quickly. So I'm changing the time frame to 125 minutes. Let me generate the chain, supply demand zone chain. Look into the recent zones. This is a high liquidity zone created when today only it's created, but it started on 18th, the leg in 18th at 11:20, 125 minutes time frame. So this is the one. Moreover, it's with a pro gap this leg out is created today. This is 125 minutes or 75 minutes supply zone. This is a high liquidity supply zone. We have to write that word. This is the inside daily high liquidity supply zone. And anything else? Today zone is pierced 14.2 at 13.25. We already deleted, right? That. Fourteenth, 13.25. This one is we deleted, so nothing to worry. This one is a pierced zone, we deleted. And no other changes here. So let's go back to next time frame, that is 75 minutes. Let us generate the chain, supply demand zone chain for 75 minutes. Any actions happened? This pierced zone we deleted already. This is the new high liquidity zone is created with the two base candles. This is the 18.3, 11.45 in 75 minutes time frame. This is 11.45. These two base candles, drop candle. That means same zone is for even for 75. So 125 minutes or 75 minutes high liquidity zone. So this is what we should understand. So no more changes here. Let's go back and now change the time frame to 25 minutes time frame. And in 25 minutes time frame, let us generate the chain. Yes, now chain is created. So any 25 minutes recent supply zones created, let us check. So this today two zones are created. One is normal supply zone and another one is high liquidity supply zone. So when it is created at 18.3, 14.40, one base candle, and then 19.3 leg out candle. So you have to look into 18.3, 14.40 minutes. Probably this is the one. This is the leg in 14.40. This is the base. So that means we are further fine tuning. While fine tuning, you are getting high liquidity zones. That is very interesting. That means inside high liquidity, daily high liquidity, you have 75 minutes high liquidity. Inside 75, 125 minutes high liquidity, you have 25 minutes high liquidity. So this is a 25 minutes high liquidity supply zone. Sorry, 25 minutes. Excellent. Anything else? There is one more supply zone. This is the most recent supply zone. This is a normal supply zone only. Today at 9:40 candle it created. Why I am showing interest is, see, 3 rejections are there from this zone. So I want to see any strong order flow is there inside. 19.3, 940. 19.3, 940, and this is today. These are the three base candles. This is a 25 minutes high liquidity. There are higher chances inside, maybe 15 minutes or 5 minutes high liquidity is there. But sorry, this is 25 minutes normal supply zone. Inside this 25, there might be 5 minutes high liquidity zones might be there, 15 minutes might be there. Time being, let us draw, because it is holding the prices. Let us see. Not only holding, again new zone is created, rally, base, drop. Maybe this is clear in 15 minutes. Okay, now let's go back to the next time frame, 15 minutes. Let us generate the chain. Major changes happened today. If we won't do this analysis, all our statistics will become wrong tomorrow. That's why it is very important. Yeah, today one 5 minutes high liquidity zone is created. That is 18th 15, and today morning 9:15 candle. So 18th and 15. Same candle. That means the same zone is 25 minutes or 15 minutes high liquidity supply zone. Okay, good. Now we got better clarity. So this is the place we need to place our short orders next time when prices. But here pro gap is there. How strong this pro gap area, we don't know. There are higher chances prices may not reach up to this zone. It go to pro gap and it will come down. If pro gap area is weak, say for example, then prices will get good support. I mean, support means a supply zone, it is a resistance. So it will get a resistance from this zone. So this is the area where you should plan your short trades. Here also we have order flow. We have a rally, base, drop. Here also you will be having order flow. But this is not high liquidity. This is a normal order flow. Let us see. Any fine-tuned 5 minutes we can identify here. Until that time, I'm keeping this as a reference. You can draw a zone like this. But I'm expecting an order flow somewhere here. Let us check. So now let us move on to 5 minutes. Anything else here? No. So going back and changing the time frame to 5 minutes. This is the last time frame. We are going to do the analysis. Now tomorrow's trades probably we will get clarity. Tomorrow means on 20 March. Okay, now any high liquidity zones created today? Look into the dates here. Here 19th, 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 total how many? We have seen 5 zones here. So we should keep an eye on these from 10th to 14th. So what's in the 10th? Let us go one by. This is a high liquidity zone, fresh zone, leg out with gap. This is 18, 15, 5, 4 base candles and 19 morning candle. That means inside that 15 minutes zone. 15-5 candle. So this is the one. We have 15-5. This is the leg in. 1, 2, 3, 4 base candles. So now we have to draw our 5-minute zone inside this. See, sometimes what happens in counter trend trade setups. Many times counter trend trade setups, the first time means immediately after the zone creation, if there is a retracement back, prices may not go to type 2 entry. From type 1 itself, it will come down. It will just reach. But the point we should not forget, here we have pro gap area is also there. But anyway, I am fine tuning to type 2. But remember this point. Counter trend trade setup, short orders are very powerful if the fine tuned zone is proper. So this is very proper. We have a beautifully, it is fine tuned. All are high liquidity zones. This is a 5-min high liquidity supply zone. Remember, this pro gap area is also, it is a gray area. We don't know how strong institutions kept their pending orders here. We never know. So it's a dangerous area, pro gap. Okay, this is the one. What is the next one? We have one more high liquidity zone here. Below this. This is also a fresh zone. When it is created, today it is created. So 19th 9:45 candle, after that one base candle here. Sorry, 9:45 candle. Sorry. This is a 9:45 candle, leg candle. We have a base candle and a drop candle. So probably this is not going to let prices enter into up to this area. This itself will hold. This is a 5 minutes high liquidity. If you have a 5-minute zone inside any high liquidity zone, fine tuning is not required. This itself will directly we can take a trade. This is called aggressive trade setup. Aggressive trade setup means without fine tuning the zone, from this is a daily zone, directly you jumped into 5 minutes. You didn't look for 75 minutes time frame inside daily. Again, you didn't look for 15 minutes zone. Directly you are taking trade in 5 minutes zone. That is aggressive trade. Why we are taking this aggressive trade? If price actions are supported, then we can take a trade. Price action clues. Some price action clues like could be a rejection before the zone prices came and coming down. So we didn't have any such rejection. Still we can take a trade because it is a high liquidity zone. That point we should not forget. And this 5 minutes high liquidity zone is having a lot of importance because it is inside a daily high liquidity zone. So this is a very good thing for us. We need not plan. If this is violated, then orders will be picked up from here. So we have any other high liquidity zones apart from this? Here we have a pierced zone today. Leave it today, created and gone. And we have 2 normal supply zones created today. Any price action? Yeah, here I am having some interest on this 13th. The reason is 4 rejections from this zone. 2 times it is tested and holding the prices. Maybe in future our software may recognize this as a high liquidity. We don't know. But my interest is rejections. Let me keep an eye on this zone. When it is a 19 today at a 13:30 candle and 5 base candles. 13:30. Is it inside this zone? Yes. See here. The reason why I have drawn is maybe some clues we may get this 25. See here now. 25. This zone is holding the prices. 1, 2, 3, 4. Even this one up to here. Something is, yeah, we have to. So this is the zone. See, came and came down. After that, once again it went and it pushed, again it went down. Once again it tried to enter, again it pushed. See now, the move is even much bigger move now. So that means there is a strong order flow inside this. Maybe at present it is not identified as a high liquidity. Who knows? It can be in future. So time being, this is a zone, 5 minutes supply zone having rejections. So probably this might be holding. If this is violated, next prices will be, this 5 minutes high liquidity supply zone will be holding the prices. If this is violated, we have a pro gap area that might be holding the prices. And after that, this 5 minutes high liquidity zone inside 15 minutes high liquidity zone, which is inside 75 minutes high liquidity zone, which is inside daily. This is a very powerful area. This is a very powerful area. So that's why you need to keep an eye on this. Any demands are created? No demands are created. That's it. Now what could be our trade plan? For tomorrow, the trade plan could be like this. Now we can expect a price movement from this high liquidity zone to sorry, I have to draw info line because that gives the ranges. So here we have a line called info line. This always gives the ranges. This is the trade plan for tomorrow. Probably Nifty will be moving within this area. So how much? Maybe around 239 points. So we can say maybe around 200 points range will be there tomorrow between these areas. If there is a strong demand here, if there is a strong supply, maybe day after tomorrow also it will be holding here only. And depending on the violation of one of these zones, the ranges will be changing. Time being, I am giving you only this range. Remember, if this is violated, this is the next range. If this is violated, this is the next range. That is supply side violations. If demand side violations, if this is violated, you need to check below any fine-tuned zones are available. Probably that may hold. You do this exercise, fine-tuning the zone. I already explained in lesson 16. Every day high liquidity zone analysis, I am explaining how to fine-tune. Inside daily 75 minutes, inside 75 minutes 15 minutes, inside 15 minutes 5 minute zones you have to identify. And below this any fine-tuned zone is there or not, you do the exercise. If this is violated, it will pick up the orders from here. That is what happened yesterday in Bank Nifty. High liquidity zone is violated. Below that there is a fine-tuned zone. It took a support. Bank Nifty gave 600 points profit yesterday. Same thing might happen here also. That's why you do the exercise. You have to do. Because I want you people should learn the important techniques. Because they are all money-giving techniques. But in this video, I am drawing only high liquidity zones to high liquidity zones. This is our support. This is our resistance for time being. So this is about Nifty's analysis as per the new changes. But remember, now trend is changed. Nifty short orders will be more active. That is the point you have to understand. And also, Nifty trend is changed to sideways. So counter trend trade setups are enabled. That's why this zone is created. This entire zone, whatever the trades are there, they are high liquidity, counter trend trade setup, short orders, all these are all. This is also probably continuation to that only. But how strong this demand is going to be, we never know. See, this high liquidity supply zone is very close to the daily demand zone. And below weekly zone is there. Below this. This is the weekly zone. And this currently weekly EMA confluence this zone is having. Probably weekly overextension completes. The price violates this daily zone and enters into this weekly zone. Then weekly overextension will complete. And again prices probably will be started moving up. From here up to this counter trend trade setup. There it gets support, again it will push the prices down. The reason is Nifty, if this demand zone is violates, Nifty's trend is changes to, daily trend is changes to downtrend. Daily trend where you will be using? In W80 trades you will be using. In weekly income trade, your daily trend is daily trend is you have to look for daily trend. So in your W80 trades you cannot take bullish trades now in Nifty. In W80 daily trend is changed to sideways, so the trend is no more bullish. Now it is towards bearish. That's why counter trend trade setups for short trades you have to look for the opportunities. But of course there is also possibility that once again trend will be changed from sideways to uptrend. That possibility is also there. We cannot rule out. But clearly supply is very strong now. Demand is not that much strong compared to the supply. See how institutions keep on creating the new supplies. You should not forget this point. But see the demand. You have only this high liquidity demand zone here. Below that you have a 25 minutes low priority demand zone is there. But all these are all high priority demands. That point you should not forget. By looking into this picture, you will clearly understand whether demand is strong or supply is strong. So it's a very important video. Hope you might have got some better clarity and understanding the support and resistance based on the high liquidity zones. So let's take a break here and continue from here in our next session. Thank you.